Nike will report fiscal first quarter 2016 earnings on Thursday. Last quarter, the global future orders growth had accelerated. This was driven by the product growth strategy in Europe and China. This quarter, the market will be watching to see if this momentum has slowed down at all, given the recent weak economic conditions in China, as well as what the net impact of the US dollar's strength will have on this quarter's results. In this earnings preview, we're going to use our Nike Inc. earnings model to see how the consensus estimates stand relative to management's latest guidance. If you'd like an overview of how this model works, please visit our website, gutenbergresearch.com, or our YouTube channel. You'll see in this latest version of our model that our model has been calibrated to consensus estimates indicated by the orange cells for both the top and bottom line earnings estimates. On the left-hand side of the screen, we have the transcript from last quarter's results, which has the guidance that management gave out at that point, and there's been no updates to that guidance. So we'll start by going through each one of these items. First, management guided fiscal year 16 revenue growth at the mid-single-digit range, and you can see here that our full year 16 estimate for revenue is about 5%, which is in line with management's guidance. And for the first quarter, we're at about 2.5% growth, and that is also in line with management's guidance. Then for gross margin, they expect first quarter and full year to expand by 50 basis points. If you scroll down to the ratio section, you'll see that gross margin ended the year at 46%, and fourth quarter was 46.2%. So in our model, we're at 46.7%, which represents a 50 basis point increase from the fourth quarter of last year, and that our full year fiscal 2016 gross margin is 46.5%, also 50 basis points over last year. Next, management guided SG&A, including both categories on the income statement, to grow at a mid-single-digit rate of growth. Scroll back up to the income statement, and you'll see that we have incorporated $10.4 billion of SG&A versus the $9.9 billion of last year, which represents a growth rate of almost 3%. So again, in line with that mid-single-digit growth rate. Other income is expected to be approximately $50 million for each quarter. So for that one, we just went ahead and inputted the $50 million for each quarter. And then the effective tax rate is expected to be 24%, which if you again scroll down to the ratio section, and you can see the effective tax rate of 24%. So once we incorporate all of management's guidance, the question is, does the net EPS number come out to be in line with what the consensus estimate is? And the real answer to that is going to be depending on what happens with share repurchases. So when we set our share repurchases at $500 million at approximately $115 per share, we retire 4.3 million shares, and at that point we come out to exactly what the consensus estimate is. If that number is a little bit higher, you can see that in the third and fourth quarter the number was higher than 500 million, then there actually could be some upside there. If you'd like to download this model, please visit our website, gutenbergresearch.com, and be sure to check back after the release on Thursday to see what our updates are. Thanks for watching.